Right now, the crypto market is once again proving why it is considered one of the most unpredictable and fast-moving financial spaces in the world, and the coin grabbing massive attention today is Ravedao, Rave. The token is currently trading around $6.20, and what has shocked almost everyone is the fact that it has delivered an explosive 190% pump in just a single day. Moves like this don't just happen quietly, they immediately pull in traders, influencers, and investors from across the market, all trying to figure out whether this is the start of a massive rally or just a temporary spike driven by hype. If you've been in crypto for even a short time, you already know that when a coin pumps close to 200% in one day, it becomes the center of attention. Charts start trending, trading volumes surge, and social media begins flooding with discussions. That is exactly what is happening right now with Ravedao. The token, which previously may not have been on everyone's radar, is suddenly being talked about across multiple platforms, and that alone creates a powerful feedback loop. More attention leads to more buyers, and more buyers push the price even higher. To understand what's really going on, we first need to talk about what Ravedao actually is. Unlike traditional cryptocurrencies or even many meme coins, Ravedao positions itself within the DAO, decentralized autonomous organization, space. That means it is built around the idea of community governance, where holders of the token have a say in decision-making processes related to the project. DAOs have been gaining popularity over the past few years because they represent a new way of organizing digital communities without centralized control. In simple terms, owning Rave tokens is not just about holding an asset, it's about being part of a governance system where decisions are made collectively. This concept has attracted a lot of attention in the crypto world because it aligns with the broader vision of decentralized society, which is one of the core principles behind blockchain technology. Now let's come back to the current situation. A 190% pump to $6.20 is not something that happens without strong momentum behind it. One of the biggest reasons for such a move is usually a sudden surge in trading volume. When a coin starts trending and more people begin buying, the available supply on exchanges gets consumed quickly, pushing the price upward. If this happens in a relatively low liquidity environment, the price can move even faster because there are not enough sell orders to absorb the demand. Another key factor behind this kind of rally is market psychology. In crypto, fear of missing out, commonly known as FOMO, plays a massive role. When traders see a coin pumping aggressively, many of them rush in without fully analyzing the fundamentals, simply because they don't want to miss the opportunity. This creates a chain reaction where buying pressure keeps increasing, leading to even higher prices. There is also a strong possibility that whale activity is involved. Large investors can accumulate significant amounts of a token before a move begins, and once the price starts rising, their actions can amplify the trend. When smaller investors notice these movements, they often follow, adding more fuel to the rally. But here's where things get interesting, and also a bit risky. Moves like this are often followed by high volatility. A 190% pump in a single day is not sustainable in the long term without strong fundamental backing. That means while the price can continue rising in the short term, it can also experience sharp corrections just as quickly.